Hey, Melissa, this is the new normal. If you thought you were going to wait maybe 6 months, a year, and then you'd see a fairly substantial drop in new car or used prices, you're not likely to see that. Take a look at where transaction prices are and what they've done over the last year. $42,258. This is a chart that shows no sign of slowing down. That's the average that people are paying at a dealership. Three things are driving this. One, you've got limited production. The chip shortage will continue to impact auto production here in North America at least through the end of the year. Still, the demand remains strong, so you've got the supply and demand imbalance there. And then you've got low interest rates. So people who are looking for a new car right now are saying, you know what? Halfway decent deals are out there. For GM, Ford, and Stellantis, the parent of Jeep and Ram, they are prioritizing their chip production for pickup trucks and SUVs, the high-profit, high-margin, in-demand vehicles right now. As for the auto dealers, we heard from a number of them over the last couple of weeks as they reported their Q2 results. You are likely to see a fairly tight inventory through the remainder of this year. Those vehicle prices now going over $25,000 on average for a transaction price. There's a little bit of good news here. Well, yes, the price is up, 26% in the last year. It has started to moderate a little bit. In fact, it was down 2.6% month over month. So there's a little bit of moderation when it comes to used vehicle prices, guys. But we are not going to see a big decline in vehicle prices that some people thought we might see, a year and a half into this pandemic.
It seems like, Phil, that perhaps there are dynamics within the auto market which is making the situation worse. I mean, if you think about, for instance, somebody who owns a car on lease and then they're faced with giving up the car and trying to buy a new car
right.
at either record prices or a long wait because of a chip shortage, they don't turn that car in, and that car then doesn't go to the used car inventory, which drives those prices higher. It's sort of like a big cycle.
Right. And the interesting thing is the retention rate in terms of leasing. In other words, I turn in a leased vehicle and I turn around and I lease another one. That's been impacted as well because people are looking at the relatively tight supply for new vehicles. And that does impact how many vehicles are available for leasing. And they're saying, why should I do a lease deal again if it's not exactly what I want? I'll just buy what I have. So it is, as you mentioned, Melissa, it feeds into this entire situation and is really hurting the used vehicle supply.
And we heard about the chip shortage potentially lasting into next year. Phil, are there any estimates as to when things will go back to normal in terms of pricing?
No, I've talked with a couple of analysts in the last couple of weeks. Really, at this point, the most they can say is we think that the true chip shortage that we're seeing, it ends early next year. But remember, Melissa, they thought it would also end by the end of the third quarter, fourth quarter. So it keeps getting pushed out. And then the question becomes, do the automakers truly ramp up production to levels that we've seen in the past? Or do they sit there and they say, look, we get high profits right now. We have discipline when it comes to production, discipline that's being forced on them. Do they keep that discipline once they have the supply of chips that they want?
Right.
Shepard Smith here. Thanks for watching CNBC on YouTube.